The spring market is finally starting to show some signs of life this week. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, March 14th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. As always, let's start off by looking at how the market performed this past week. There are 35 homes on the market, which is one less than we had last week. The average asking price of those homes is up to $2,184,000, up from the $2,026,000 that we had last week. 15 homes went pending, more than double the homes that went pending last week, with an average asking price on those pending sales of $2,149,000, up from the $2,047,000 pending asking price last week. 5 closed this week, one less than last week, but the average sales price of those homes increased significantly, up to $2,345,000 from the average of $2,073,000 we had last week. So now we know how the market performed this past week, and now we'll look at the broader trends that help us determine where the market might be heading. But before we do that, if you find this information helpful, why don't you hit the subscribe button down below so you can be the first to know every time you have so that you can know how the market is shaping up this year. And why not share it with a friend as well? That way you can help them stay in the know also. Okay, let's take a look at the market indicators. After a month and a half of constantly increasing inventory, we had a week of leveling off this week. 35 homes is still below a normal inventory level in San Ramon, and with the high number of new pending listings, it's actually encouraging to see that the inventory number stays in those 30s, in the 30 range. If we doubled our pending sales, but that reduced inventory by half, we would start to see buyers leaving the market out of frustration of the lack of inventory to choose from. As I alluded to in the inventory segment, the turnover rate improved significantly this week. We climbed up over 100% at one point during the week before falling back just under at 90%, or a little over 90% at the end of the week. With the new inventory that joined in. But the high number of pending sales this week leads me to believe that we will be sitting comfortably above the 100% turnover rate very soon. Another encouraging movement in the market direction was the over-under number. It returned to the over range for the first time in over a month. Here's our break even. We had been living in that under range for over a month now. The average sales price is just over $12,000 higher than the average asking price, which is less than 1% over asking. But with the recent increase in the average closing price and the turnover rate crossing over the 100% threshold this week, I would expect to see the over-under number is going to be climbing higher into the over range in the coming weeks. The average sales price continued to improve this week. The average 30-day rolling average sales price is back over $2 million. Oh, I don't have 2 million on my scale here, but it's over $2 million this week, with the average asking price on the 15 pending sales well above 2.1 million. I assume the closing price will continue to increase in the coming weeks as well. The one market indicator that had significant negative movement this week was the tech equities market. It dropped another 4% this week, bringing it down more than 12% from the peak that we saw last month. The strength of the tech equities market significantly affects the cash available for a majority of the buyers in our housing market. And significant drops in the funds means a large portion of our buyer demographic has less money available to put towards a down payment or to use to qualify for a loan. It will be interesting to see how this fund moves with the current tariff trade war situation that's going on, but definitely something that we're going to need to keep track of. interest rates remain relatively flat this week. They improved just by 2 basis points, or increased by 2 basis points. The inflation numbers improved this week, but I have given up speculating on when that might actually affect national average on the mortgage rates. The good news is that our market is remaining strong in spite of the fact that the interest rates have remained well over 6% since back in 2022, well over 2 years now. Overall, the market continued to improve this week. The one major setback was the tech equities taking a big hit. Despite the poor stock performance, we saw a significant improvement in the housing market performance. The single-week pending sales numbers are the highest they've been since the end of last spring. Average sales values continue to improve, and at least half of the current pending sales received multiple offers. We might actually get a hot spring market after all, even if it shows up a little later than we all expected. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and I'll see you next week with a new update.